Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational entertainment purposes only. They are not financial or tax advice. This week I want to discuss what's been happening in March, this major market collision where we see big inflows from Strategy and the ETFs. Bitcoin Borrow Die is powered by Bitstack. Build your wealth in Bitcoin terms. Visit us at www.trybitstack.com. So one of the major things that has happened over the course of this month is a big reverse in the flows of the Bitcoin ETFs. Here we're looking at them back from March 24 into March 2026, so 2-year period here. Green means net inflows. Red means net outflows, and we can see basically all of 2020, most of 2026, we've had outflows, and now we finally flipped over to inflows with a big 1.5 billion in March of 26. So this is a great sign to see ETFs coming back to the market for inflows, people hodling, people buying, and just acquiring more Bitcoin in their ETFs. And then this kind of brings us to a coordinated buy phase where the ETFs are buying a ton of Bitcoin, and now Bitcoin corporate strategy companies, treasury companies have over 1 million coins on their balance sheets, and that's over 5.5% of the total network that will ever exist. So these are two really big forces that are just sucking up all the Bitcoin. And of course, one of the major treasury companies is Strategy. And here we can see their Bitcoin accumulation from January of 2021 all the way through January of 2026 this year. And they've just had their foot on the gas and continue to accelerate. In a single week, they bought over 22,000 Bitcoin, so for about 1.5 billion. That's what Strategy has done in 1 week. That's about what we're seeing for the month of inflows for the ETFs. And this just creates a vacuum effect where people who have the ETFs or Bitcoin for retirement and their retirement accounts will hold for the long term, and Strategy has no plans to sell their coins. So all of this supply is just coming off the market, and given geopolitics, given the macro situation, it's not a very favorable setup. But Bitcoin still is holding through this $66,000-$72,000 range quite well. At the same time, all of this supply is coming off the market. And one thing that's really driving the Strategy accumulation is the relatively new product. I mean, it IPO'd like 7 months ago, Stretch, STRC. And since that period, they've basically doubled its market cap. That means they've issued $2.2 billion worth of Stretch into the market and have used that to buy Bitcoin. And then recently, Saylor just announced an upsize to this ATM of $21 billion. So just pause here and think about this for a second. So since August of 25, they've sold $2.2 billion worth of Stretch. And now they've upsized their ATM like 10x, basically. From what they bought about $2 billion so far, now they've increased it to $21 billion. So how much can they sell over the next year and the year after that? When are they going to upsize this 21 billion in Stretch? They're just going to sell just an ungodly amount of Stretch into the market. And they've also increased their common ATM by $21 billion because they need that as well to back and to collateralize Stretch. So what does this mean for us for Bitcoin Borrow Die? What does this mean for HODLers? when ETFs and corporate balance sheets are just vacuuming up tens of thousands of Bitcoin every week, it's a financial and fundamental shift in Bitcoin over time where sellers will be exhausted. They'll be removed from the market. And then when there's no one left to sell or fewer people to sell at a current price, the price moves up. If ETF holders aren't selling, if strategy isn't selling, if Bitcoin borrow die, people aren't selling, price will move up over time. And this is great for our collateral. This is great for rolling loans. This is great for Bitcoin as collateral to be able to borrow against it. So it's just a higher floor price. The collateral becomes more resilient to short-term dips. In general, it's just worth more, which is great to borrow against, better LTVs. Lower volatility, which means we should want to be conservative with our LTV regardless, but just as volatility starts to taper off a little bit, although I mean it could increase as we get higher prices, but we wouldn't see as severe of drawdowns, or we wouldn't see such low prices where we'd have to worry about margin calls as the price floor continues to increase. And then long-term tailwinds is we're just riding the same wave as BlackRock, as STRC, as these other companies where, of course, we're not going to outbuy them or anything like that, but we don't need to. We just need to not sell and allow the demand and supply dynamics to take care of the rest. And then the key for all of this is just to stay solvent, stay free, don't get ahead of your skis, keep an eye on your LTV, do not get margin called, or definitely don't get liquidated. You can test your numbers, you can run models at Bitcoin Borrow Die, but really keep an eye on just the ETFs, accumulation, strategy, and stretch in general. The $21 billion upsized ATM is a huge deal, and it'll be interesting to see when they need to increase that again. Like this video, share it with your friends, leave your comments below, and reach out to me if you have any questions.